Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with ASB. Today we go offshore and look at some comments coming out of China that are actually very important for New Zealand's interest rates and for the global economy. Premier Wen Jiabao said on Friday that he was worried about the direction America was taking with its increased fiscal deficits and its printing of money. What he was saying was that China has $1 trillion invested in the US, mostly in US treasuries. And he's saying he's worried about America effectively devaluing those investments by printing too much money and by issuing too many bonds, thus reducing the price of bonds, increasing the interest rate, the yield, and also devaluing the US dollar. Now this forced President Obama's office to come out and say America is strong and it's the best place in the world to invest your money. He needs to say this because effectively China is underwriting America's recovery plan. In fact, China has underwritten America's consumption binge over the last 5 years. This is how it worked. China, being the factory for the world, would produce the consumer good and sell it to America and make a big trade surplus. China would then lend the money from that surplus in US dollars back to America, who would then have low interest rates and, lo and behold, buy more Chinese stuff. It was a lovely merry-go-round, but it's threatening to be unravelled by the very big problems in the US economy and by China's own export engine grinding to a halt. Now, the US is planning to borrow $4.5 trillion over the next 4 years, and it needs someone to buy all these treasury bonds that it's going to be issuing. Now it's relying on China to keep buying those bonds. So when China gets a little bit nervous about the value of these bonds and about the value of its investments, people in America get nervous. Essentially, they're worried America's banker will say no. Now this is a worry for the global economy and for interest rates globally. If China, for example, were to stop buying these US treasuries, or in fact actually started selling some of the ones they've got, interest rates globally would increase because interest rates all around the world are based off US interest rates. And this delicate dance we have now between China and the United States is something we should all be watching because obviously high US interest rates mean higher interest rates for us. Also, if this turns into a massive trade dispute, which it could do, this is bad for everyone. Remember, China is our third largest trading partner behind Australia and the United States. Australia also depends on China's manufacturing export factories, buying its raw materials, its iron ore and its coal and its various metals. And what if China, for example, doesn't run a trade surplus anymore? It won't have the cash to buy those US bonds. So where else is the US going to get the money from? From the Middle East? Well, with oil under $50 a barrel, they're not making much money either. So the Americans themselves could have to buy these bonds, and that will push up interest rates. Unless, of course, the US Treasury prints an awful lot of cash and buys back corporate bonds. That cash will be used to be pumped into Treasury bonds. You've effectively got a crowding out of private bonds in America. And this fundamental issue then comes back to, is America going to remain the reserve currency, or the US dollar remain the reserve currency for the world? Because that's what America is basing its strategy on. It is relying on the fact that people always want to hold US dollars, and that in effect deficits don't matter. This was the view of Ronald Reagan and Dick Cheney, the former vice president under Bush, that deficits didn't matter. Barack Obama seems to be trying to prove the same again. But we have someone on the sidelines, the Chinese, who could throw in a red card and say deficits do matter, and we'll watch it closely. I'm Bernard Hickey. That was an economic weather report brought to you in association with ASB.